Hello everyone, welcome to our channel. After the U.S. Federal Reserve's statements that interest rate hikes would continue, Bitcoin fell below $20,000. Bitcoin fell below $20,000 today, with U.S. Federal Reserve Chairman Jerome Powell making statements that interest rate hikes will continue at the Jackson Hole Economic Policy Symposium. According to Bloomberg's report, Bitcoin dropped 7.6% in 2 days after Powell's speech. The largest cryptocurrency has lost nearly 1% in the last 24 hours. So what does this mean? Could a new drop be seen in Bitcoin? Yes, this seems possible in the current scenario. We may see a new downtrend in Bitcoin. Although many strategists mark $20,000 as the critical threshold for Bitcoin, the support levels may decline further. According to data from CoinGlass, the withdrawal of $288 million worth of cryptocurrencies from the market in the last 2 weeks has been a compelling factor for the crypto market. On August 19, $562 million exited the market, making it the largest amount seen since June 13. We see that $400 million has been liquidated in Bitcoin in the last 24 hours. When the data on all cryptocurrencies are examined, $288 million of long positions were liquidated within 24 hours, while the total value of the positions that were liquidated on the short side corresponds to $85 million. Of the total liquidation volume of $374 million, $164.16 million was realized on the OKEX exchange. On the popular cryptocurrency exchange Binance, which ranks second in 24-hour liquidation volume, a total of $88.86 million has been liquidated. We see that $400 million has been liquidated in Bitcoin in the last 24 hours. When the data on all cryptocurrencies are examined, $288 million of long positions were liquidated within 24 hours, while the total value of the positions that were liquidated on the short side corresponds to $85 million. Of the total liquidation volume of $374 million, $164.16 million was realized on the OKEX exchange. On the popular cryptocurrency exchange Binance, which ranks second in 24-hour liquidation volume, a total of $88.86 million has been liquidated. While investors were following the developments from the Fed, the agenda of the crypto money market was MTGOX. Tokyo-based cryptocurrency trading platform MTGOX's bankruptcy after a robbery attempt determined the fate of crypto money again. Bitcoin, stolen MTGOX reacted badly to rumors that the funds would be refunded and reprocessed on August 28 in the market. As you know, Bitcoin is the basic building block that guides all cryptocurrencies. Although most people say this is wrong, it is a fact. The cryptocurrency market is an interconnected chain. Although they seem independent from each other, all cryptocurrencies are affected by the movements of Bitcoin. If Bitcoin goes up, you can see a bullish move in altcoins as well. Or if Bitcoin drops, you may see a drop in altcoins as well. To understand this whole process well is to understand the workings of the cryptocurrency market. As Crypto News, we aim to raise awareness of you. We do not provide investment advice on this channel. What we want is to give you a good understanding of the cryptocurrency market. That's why we recommend you to watch our videos until the end. Everything we say is valuable. Every news we convey to you is valuable. Of course, all this is for those who really want to be investors. It is for those who want to be an informed investor. Last-minute development on cryptocurrency prices. Cryptocurrency prices have fallen. The fall in cryptocurrencies created an earthquake effect. Cryptocurrency markets fell sharply after Fed Chairman Jerome Powell's statements that interest rate hikes could continue. The possibility of the ECB to increase interest rates after the Fed accelerated the decline. Bitcoin dropped below $20,000 and Ethereum below $1,500. the inflation problem in global economies continues. Inflation rates, which have not been seen for decades, especially in the USA and the EU, caused central banks to increase interest rates. According to the News of Hurriyet, the U.S. Federal Reserve and the European Central Bank, ECB, increased interest rates. While the central banks, which made interest rate hikes not seen in 20 years, were trying to rein in inflation, it was understood that the problems could not be overcome by only increasing interest rates. While the losses in employment, the slowdown in the economy due to increasing interest rates, and the risks of recession continued, cryptocurrencies were also severely injured. After Fed Chairman Jerome Powell's statement in Jackson Hole, there was fluctuation in the markets. While the dollar was on the rise, the cryptocurrencies started to collapse. Central banks' interest rate hikes have negatively affected the cryptocurrency markets. Cryptocurrencies fell, as investments were expected to turn to deposits due to the increase in interest rates. While investors in need of money went to the selling side, the people who believed that they would protect their portfolio and that there would be an uptrend also put on hold. However, due to small upward movements, investors continue to invest believing that there will be a continuation, and large losses can be seen. Bitcoin, which was around $24,000 last week, accelerated the decline with Fed Chairman Jerome Powell's statements in Jackson Hole. Bitcoin, which fell to the level of $19,000 in a short time, lost about 17% compared to last week. Bitcoin has lost nearly 72% of its value from its historical peak of $69,000. Following the decline in the leading cryptocurrency Bitcoin, Ethereum also started to lose value. Ethereum dropped from $1,700 to $1,422. Ethereum is down 76.5% from its historic high. It is useful to be careful when trading in the crypto money markets. Investors lost a lot of money due to the target prices put forward by the experts of social media and cryptocurrency exchanges. Since there is no margin gap in cryptocurrencies, the money can be folded at once, while it can be completely lost at a time. It is a great benefit to trade by placing stop orders while investing. Thus, the losses are minimized and the loss of the portfolio is prevented. Since the crypto money markets are still new, it is not yet known how to react to the developments in the world. After the Russia-Ukraine war, crypto money markets took a different direction, and they followed a different path in the face of extraordinary interest rate hikes by central banks. Therefore, it is necessary to pay attention to cryptocurrencies, which are not yet known how to react pessimistically. The biggest reason for this is that $100 billion is steam. After the critical development in the crypto money market on Friday, the decline accelerated. While Bitcoin fell below $20,000, $100 billion was vaporized in the market. On the other hand, a claim circulating on social media caused crypto money investors to panic sell. One of the first important exchanges of the crypto money markets, MT. After GOX was founded in 2010, it faced a historic hack in 2014. After the attack, 850,000 bitcoins were stolen and the stock market went bankrupt. Many courts were held due to the hacking scandal in the stock market with thousands of victims, and in one of the court processes, MT. It was determined that there were 200,000 bitcoins in the forgotten cold wallet on the GOX exchange. On social media and various channels, MT claims that the GOX exchange will distribute 137,000 bitcoins to creditors as of today, are leading the decline in the crypto money market. Powell, who warned that interest rate hikes could be painful for the economy, said that high interest rates, slowing growth and moderate employment would reduce inflation, but households would have some difficulty. In addition, Powell stated that the size of the rate hike in September will depend entirely on the data. Powell, signaling that they will make an aggressive interest rate increase in order to reduce inflation rates quickly, upset the crypto money market with his statements. In the U.S. stock markets, indices declined by more than 3%, while sharp decreases were seen in cryptocurrencies. Ethereum, the second highest volume digital asset, tumbled more than 12%. Ethereum dropped from $1,700 to $1,486 on Friday. Continuing its decline on Saturday, Ethereum saw $1,447 and tested the lowest level in a month. While all this was going on, a wallet that had been dormant for 7 years also took action. A certain amount of Bitcoin, which has been dormant for over 7 years, is on the move for the 4th time this year. Crypto analysis firm CryptoQuant drew attention to the interesting event in its on-chain analysis quicktake, which it shared today. The data reveals that about 7 to 10 years of 5,000 BTC was spent in a single block. CryptoQuant states that this move could lead to further declines or consolidation. The potential release of such a large amount of BTC has made the markets nervous. The prevailing speculation is that creditors will sell their holdings as their original investments in 2014 grew by about 42 times at current prices. However, Eric Wall, one of the creditors, stated that the refund rumors were unfounded. He pointed out that the reimbursement system has not been activated yet. As highlighted by CryptoQuant over the weekend, Bitcoin once again fell below its realized price of $21,700. The analyst firm draws attention to the fact that it is a good area for savings, but warns that the market has not yet formed a bottom. Because exact metrics, albeit positive, are still immature. Meanwhile, Sentiment Feed noted that we could see a market bounce as shorts pile up. Currently, BTC is trading below $20,000. Justin Bones, founder of crypto-focused fund Cyber Capital, said that Bitcoin is one of the worst cryptocurrencies technically and is merely a speculative asset with no use, due to its lack of technical progress compared to other cryptocurrencies. Crypto-focused fund Cyber Capital's founder, Justin Bones, said that Bitcoin is one of the worst cryptocurrencies technically and that it is merely a speculative asset with no use, due to its lack of technical progress compared to other cryptocurrencies. In an 11-part Twitter post, Bones argued that Bitcoin's value proposition has long deteriorated due to the deterioration of its long-term security model, relatively weak economic qualities, and a lack of capacity, programmability, and composability. Bones, who founded Cyber Capital, one of Europe's oldest crypto funds, in 2016 and has described himself as a full-time crypto researcher since 2014, has been a hotly debated figure in the crypto community for years. Bones also runs its own nodes on the Bitcoin and Bitcoin Cash networks. While Justin has been a strong advocate for BTC in 2014, he said that Bitcoin has changed a lot since then, and that his decision not to increase the block size limit represents a major deviation from Bitcoin's original vision and purpose. Also, Bitcoin was launched in 2009 as an electronic peer-to-peer cash system. Satoshi Nakamoto states in the Bitcoin white paper that valuing cryptocurrencies as an investment would however have an unintended consequence of its main purpose. Matthew Kimmel, an analyst at CoinShares, one of the largest crypto fund management companies, said in the program he participated in the U.S. media CNBC, that he thinks Bitcoin is approaching the bottom now. Stating that even those who bought Bitcoin in 2017 did not sell in this cycle and said that the trust in the biggest crypto money continues seriously, Kimmel also made an important comment about the miners. Stating that Bitcoin miners have made serious sales with the recent declines, the analyst said that the Bitcoins in the hands of the miners have decreased and they will start to buy again after a while. In addition to having a much more stable price trend in Bitcoin, we may also be approaching the bottom. There are important reasons for me to make this comment. First of all, while Bitcoin rose to very serious levels in the 2016-2017 period, most of the investors did not sell. Those who bought at that time did not sell in this market cycle either. They could easily sell more than $60,000 in profit. This clearly shows us the trust and long-term perspective on Bitcoin. Miners have now started to sell their Bitcoins. However, the supply is decreasing and they will start buying again when their BTC runs out. When we look at history, this has always been the case. The third reason is stock markets. Since the beginning of 2020, there have been very serious Bitcoin exits from exchanges. There is a gradual contraction in Bitcoin supply. The Asian side. Because there are important developments regarding Bitcoin. Noting that Asians are turning to crypto money trading with the pandemic, the IMF pointed out that the increasing integration between crypto and Asian stock markets may create risks for financial systems. It was emphasized that it increased with low interest rates and ease of access to finance, and it was stated that the return and volatility correlation between Bitcoin and Asian stock markets increased significantly after 2020. As the most striking example in the report, the change in Bitcoin correlation with Indian markets was shown. Accordingly, the correlation, which was 0.03 in 2017 to 2019, increased 10 times to 0.31 in 2020 to 2022. Similarly, the volatility correlation also increased 3x. In the article, it was noted that this increase indicates the possibility of spreading risk sensitivity in the crypto and equity markets. Tokyo-based Mt. Gox, the largest cryptocurrency exchange of its time, filed for bankruptcy as a result of a cyber attack in 2014 and announced that 850,000 bitcoins were stolen. 8 years later, it was announced that 140,000 bitcoins would be distributed to victim investors with a court decision. The $3.3 billion value of today's Bitcoin crypto investors, which will enter the market at once, created a sales wave in the crypto money markets. With the effect of the decrease in risk appetite, the total market value decreased to $1 trillion. All these developments show us that there is still a trust problem in all cryptocurrencies, especially Bitcoin. There is still a long way to go before this trust problem can be overcome. Bitcoin is the ancestor of all cryptocurrencies. No one can deny this. His actions affect the entire market. In this respect, the cryptocurrency market is a risky market. We hope you liked the video. Do not hope to subscribe to our channel and turn on notifications. Thank you for watching us.